Welcome to the Socially Responsible Investing Podcast, brought to you by AIO Financial at AIOfinancial.com. This is episode 9. I'm Bill Holliday, and in this episode, I spoke with Maria Kamin she's with Parnassus Investments, but she is the ESG Research Manager, and that's Environmental, Social, and Governance. Parnassus Investments offers 6 publicly traded, socially responsible investing mutual funds. They offer the Parnassus Fund, which is their first offering, and it opened, the inception date is 1984. It's a multi-cap, so various size companies, and core equity, U.S. equity fund. The Parnassus Equity Income Fund, which is a large cap, core U.S. stock fund, and that initiated in 1992. The Parnassus Mid Cap Fund, which is mid cap, core U.S. equities. Parnassus Small Cap Fund, which is small cap, core U.S. equities. Parnassus Workplace Fund, which is large companies, large cap, U.S. equity, and the Parnassus Fixed Income Fund, which is intermediate term, government, and credit. Maria works with the screening. There are 3 people working on the screening at Parnassus. And this fund these funds do screen very well when you're just looking at performance, not even considering the SRI qualities. When you do screen for SRI funds, it is one of the top funds, or they are some of the top funds. See, Maria told us in the podcast, and again, you can find this podcast on our website. Again, it's AIOfinancial.com. On the right side, there are a list of podcasts, or under Socially Responsible Investing, there is a podcast list. You can also find these on iTunes. For this video, I'm just going to give a brief summary of our discussion. Parnassus goes through 2 stages of screening. The first stage is just an elimination, an avoidance screening, where they avoid 6 areas. Companies that deal with alcohol, gambling, tobacco, weapons, nuclear, and that have dealings with sedan. They eliminate those companies. That's the first screen. The second screen is a qualitative screening. And there's 5 different areas, and they weight these areas depending on the industry, how pertinent, how important it is for those. Some of them are going to be relevant to all companies, but some are going to have a bigger impact for certain industries. Those are weighted and then graded or scored based on the information that they're able to obtain, and then that goes into their second stage of screening. The 5 issues in this qualitative screening are governance and ethics of the company, the workplace, discrimination and environment, community relations, customer product, so the types of products they produce, and environmental impact. Again, those are weighted, they rate them, and that gives them their second screening. They are involved, very active with voting their proxies, the companies that send voting rights or the votes to the shareholders. They actively vote, and then they do negotiate and talk with companies to try to make changes. So they're involved with that, not only screening but shareholder advocacy part. One of the issues that they were working towards this last year was, for small companies, sustainability disclosure, just disclosing how they're doing on some of these different issues. I'd like to discuss one of Parnassus's funds, the Parnassus Equity Income Fund. Ticker is PRBLX. This is one that shows up well on screenings. Morningstar gives it a 5-star rating, their highest rating. It has above average returns and low risk relative to other large cap domestic, large blend funds. The expense ratio, and this is the percentage, and the cost to operate the fund, and that's for manager expenses, these ESG screening expenses, advertising, compliance, any of their costs are 0.94%. And so that expense ratio comes right out of your profits or makes your losses even bigger. So you want that to be as little as possible. In index fund, you'd expect that number to be less than 0.5%, in a lot of cases less than 0.25%. For a managed mutual fund where they're actively screening, under 1% is a good goal. And this is reasonable for a managed mutual fund, and especially for an SRI mutual fund that has this double layer of screening. Total assets are $5 billion. The turnover rate is 63%. So effectively, during a year, they liquidate 63% of their portfolio and buy new assets. Top holdings are Procter & Gamble, Pepsi, Teleflex, Gillette Sciences, Waste Management, Applied Materials, Google, Iron Mountain, Questar, Cisco Corporation, Charles Schwab, CVS, McCormick & Company, C.H. Robinson Worldwide, and Target Company. Actually, I'll just run through the top 20. Also include MasterCard, Spectra Energy, Paychex, Shaw Communications, and UPS, United Parcel. They have about 31% in giant companies, 34% in large, 28% in mid-size, 5% in small, 1% in micro companies. Number of holdings, 37 total companies that this fund holds. Mostly stock, 92.5% stock, the remainder's in cash. Let me see, standard deviation is about 13.5%, which is lower than the S&P 500, which standard deviation, I don't see it on here, is around 16%. Versus its category, it is in the top for 3 months, it's 28%, 6 months 22%, 1 year 47%, 3 year 54%, 5 year 3%, 10 year 12%, 15 year 2%. So in the top half in general, except for that 3-year number, the return versus the S&P 500, it's been better than the S&P 500, except for in 2010. You can tell from that standard deviation being lower. And actually, some studies are saying that that ESG screening does screen out some of the riskier companies. I think one of the good performance pieces is because they did screen out the banks and housing stocks before the financial crisis. Just like to state that this podcast and this video log is for informational use only. We're not making investment recommendations. These investments are not appropriate for everyone. Please read the prospectuses carefully and discuss this with your financial advisor before making these investments. Our next podcast, we will be talking with Self-Help Credit Union. And I would like to thank you for listening to the Socially Responsible Investing video log. And do check out our podcast, and you can hear my interview with Maria. I'm Bill Holliday with AIOfinancial.com. Please, we welcome feedback. Any feedback's good. Suggestions, comments, questions. You can email me, bill@aiofinancial.com, or call 520-325-0769. Thanks.